It's a strong set of numbers from Uno Minda. In fact, the second consecutive quarter where in terms of the revenue growth. Margins too have expanded and there is growth across their product segments led by lighting and alloy wheels. Sunil Bohra, the Group CFO and the Chief Executive Officer at Uno Minda, is here with us on the show now. Sunil, morning and thanks for joining in. This is Rima here. First on the top line, very strong numbers, 20% growth. For the full year, FY24, you had guided for a 15% growth. Do you think you can beat the full year guidance? What's your prognosis for the remaining 3 quarters?
Hi, Rima. Honestly, we are not guided 15%. That was the number which your colleagues tried to sort of interpret. So we always say that whatever industry grows, we should grow at least 1.5x. And then based on the assumption that industry grows at 8 to 10%, the growth of 15% was put up on screen. But I think based on what we are working and if we see the trend, I think we should be able to do much better than that. There are a lot of areas where we are doing significantly better. And as you rightly mentioned, few businesses are seeing significant growth. We are pretty confident that this growth momentum which we have built for past few years, that's expected to continue in the coming few years as well.
Sunil, one area where you are doing very well is the sales to two-wheelers, electric vehicles, two-wheeler EVs. It's now about 12% of your revenues. Based on the order book, what's the growth that you can clock in? How much do you think it will be able to contribute to your top line?
Yeah. So this business, as we all know, has been doing phenomenally well. We have been one of the early movers to capture the opportunity in terms of the two-wheeler EV segment. As you know that all our products are agnostic to EV or IC engine. So we have built a portfolio for EV products which is unmatchable in the industry, at least domestically. And if you see quarter on quarter, year on year, basically this growth momentum which we have built, we expect to continue. Last quarter, this quarter, the revenues have almost like double in this segment. And as you rightly mentioned, while the EV penetration in two-wheeler segment is only 4.5%, we have grown by more than, or our share of revenue of EV in two-wheeler segment is roughly around 12%. So we do expect this momentum to continue. As we speak, we have recently sort of in process of starting the commissioning activities for a couple of our EV specific plants. One was the JV with Freevo and another is the JV for EV motors with Buhler. So both these plants are expected to commission in this quarter. And with that, we do expect the strong growth momentum which we have built to grow further. Coming to specific numbers, I think a year and a half back or so, we said that the EV specific for two-wheeler only, the JV with Freevo, we said we would want to grow to 1,500 crores plus in FY26. But where we are today, we do expect that we will be able to do much better than that.
Sunil, so if you could just help us with 2 numbers, just to keep that perspective quite sharp and in focus. What is the, let's say by the end of FY24, where do you see your total order book and what percentage will be EV in that order book? And similarly, when it comes to the top line, what percentage will EV be? I think you're at about two-wheelers, you're at about 12% right now. But at a company level, top line, what is the EV percentage expected and order book? And will it be margin accretive?
Yeah, definitely. So in terms of order book, as you would have noticed, we have been significantly adding orders and specifically from the EV segment per se. And we don't talk about the lifetime order, etc. We talk of annualized revenue expected. So current order book is close to 2,500 crores a year from the EV segment per se, and which includes both the EV products and also the current product which goes into EV. So EV business per se, today order book which we have already sort of in our pocket is roughly 2,500 crore plus and sort of growing. We are seeing significant traction going forward and we do expect this to grow. So in terms of overall revenue pie, it's a little difficult to sort of put a number because you'll appreciate that while there is a good traction for EV in three-wheeler and two-wheeler segment, but I think PVs are yet to catch up in terms of the penetration. And even from Uno Minda perspective, we are working on the PASCAR EV products per se, which are a lot of them are in the pipeline. And hopefully once we see some product development and some alignment with the customers, we should be able to communicate better. But if you see from a two-wheeler sector perspective, we do expect this growth momentum which we have built, which currently is 12%, to even grow further going forward.
And what's the margin delta that this higher share of EVs bringing to the overall margin profile of the company?
So as of now, I would say a little premature to talk about margin. Reason being, we are in the process of commissioning 2 specific plants, and you'll appreciate when you commission 2 large plants, you will have your fixed costs, your depreciation, interest, everything starts from day one, whereas revenues gradually ramp up. So initially, we don't expect it to be in line with the group average margins. But as we move forward from next year onward, as volumes build up, we do expect them to be in line with the group average margins.
All right. Hi, Mr. Bora. I think I was the one who was trying to put you down with regard to that, trying to put a number to that 1.5 times industry. You're sticking to that 1.5 times industry growth, or do you want to up that, given the kind of pace you're growing at?
So 1.5 times, Nigel, what we say normally is for medium to long term. It is not year-to-year basis.
Got it.
And if you see the last quarter itself, the industry on an average for all the volumes perspective is grown only by 2%. And we have grown in revenue terms by 21%. So it is definitely not 1.5 times, it's actually much more. So
that's the reason I asked you, Mr. Bora, whether you wanted to revise that. But I take that point. You want to outbeat the industry's growth substantially. But Mr. Bora, give us a couple of numbers. The revenues in your switches segment, that's been stagnant for the last few quarters, 850 crores approximately. Now, once your four-wheeler switch plants at Chennai and Farrukhnagar commence production, what could this average quarterly revenue look like? And by when will we get to this number?
So average quarterly revenue definitely can be much higher. We are expecting the short term itself to be more than 250 crores. But I think what we have to bear in mind is that this 800 crore, which you are saying is flat. First of all, if you see quarter to quarter, if you see last Q1 to this Q1, it has grown by almost like 14-15%. That's number one. Number two, this segment also includes the two-wheeler switches, where we do have a lot of exports to the North America and Europe. And we have actually seen a bit of moderation there in terms of volumes. So this current revenue, what we are seeing, also factors in that. So once you see an uptick there, that advantage also will come in addition to the two plants which you just spoke about.
Mr. Bora, we'll leave the conversation here for now. Thank you very much for joining in and wish you all the very best.